Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, May 23rd, 2019. Actually, got lots to cover today. We had some, at least seems to me, very interesting day, lots of developments. I'll start out with the what happened this morning. Did several updates. I mean, a lot of updates in the trading room, but two different videos on the site today. Started out this morning pretty darn bearish and short. Had a great day, but then mentioned the trading room, my concerns, and I'll show you what I covered today. But pretty much ended the day from being bearish and short to being bullish and long. So I'll show you why and what happened. And again, still anybody's game right now, because if you recall in the recent videos, bigger picture is this: we're smack between rock and a hard place between support and resistance. SPY has what I believe to be pretty significant resistance up here around 289 or so, and the recent lows, call it the 280ish level, is support. And so what happened today is SPY came down close to, but actually unlike QQQ, it didn't undercut last week's lows. The fact that QQQ undercut last week's lows had the potential to be a bearish scenario. Here, let me get to that. Let me just talk, because that's really where my focus is lied: tech stocks and QQQ. All right, so we undercut the lows. And again, I said that had the potential to, be very bearish, open up a lot of selling. But what happened is intraday, when we undercut those lows, it wasn't impulsive. This is, again, if you remember the site, this is a rehash from the first, or maybe the second video I did today. But here's 178. Remember, that's the big level I was watching, big support level. So we came down, we gapped down, which first of all in itself was bearish, because that gap, we gapped down below those triangle patterns. I'm going to jump back there real quick, because I probably should have covered that on the daily chart. Remember, I had these triangle patterns and we gapped down, so that trapped a lot of longs that might have had objective stops right below the recent lows. Let's say you were bullish and long, or you were wanting to short but a little unsure and you wanted to see what happened. So it denied both an objective exit for longs and an objective short entry for shorts. That's what gaps do. So the big moves happen lately in the futures overnight. And anyway, so that's what happened today. And SPY, you can see the same story. We had even a better symmetrical triangle and a clear gap down below. So on face value, and still at this point, let's just say that was bearish and may very well prove to be bearish, because again, a lot of people may be trapped. But I'm going to show you some potentially bullish developments, and I'll use that keyword potential right now. Let's go back to that daily chart, or the intraday chart. Okay, so the story, I'm an old-fashioned tape reader and read the tape, and this is the story here. We had that 178, we gapped down to it, held it on a few tests, and then broke down below, but not an impulsive breakdown, and there was no follow-through. In fact, for the almost bulk of the day here, you can see from a little before noon up until the end of the session here. Let me grab the right tool here, box tool. We just traded sideways, and the market just could not go. They couldn't take it any lower, and on $178 security, a move down to 177 a quarter is not an impulsive or a solid breakdown. And as I always say, all that matters is really what happens at the close at the end of the day. So late in the session, around 3, and that's the point I mentioned. I reversed two or three times today, but ended up, staying long. As the day went on, they couldn't take it down. Figured we'd get a ramp and recover, and we did. We recovered 178, not by a large margin. We popped above it. You can see we closed at 178.25 on QQQ. However, that is a recovery. It is a successful defensive support. Doesn't mean that support level cannot go tomorrow. We've got a 3-day weekend coming up, and what it boils down to is, what are the underlying supply and demand dynamics right now? Are there more longs trapped, especially after today, that want out of this market, are going to sell and close out positions before the weekend? Or are there more willing buyers that whether they're were already long, or they weren't long and wanted to be, and waited for the first good correction, because we have pulled back to a very solid support level, which so far is held. So I'm giving you both sides of it, but at the end of the day, as I always say, support is support until and unless broken. QQQ only broke it intraday, and as I always say, if you're whatever time frame you're trading, if you're trading a weekly chart, all that matters is how the candlestick closes on Friday at 4 p.m., the end of the week. That's when a weekly candle is finalized. On a daily chart, all that matters is the 4 p.m. close, so it's a stick save. That's plain and simple right now. Doesn't mean that we're off to the races right now, but it has the potential, which now we'll drill down to the intraday charts, and I'll show you that. All right, let's start out with a 60-minute chart. I can even go to the QQQ official trade because we closed that out today. I've been staying away from this chart on the public videos. We shorted QQQ, where was it? Somewhere up here on the breakdown of this trend line. We had a 2-hour, 120-minute chart right there, and shorted somewhere on the breakdown here. Let's go back to the 60-minute chart. So we hit T1, T2, and then T3 today, finally, our final target. And final targets are a level I typically, not always, but typically set that at a level I expect a trend reversal. And so here's a correction. This was a final target from way back here, was hit today, and we had a reversal off that level. We slightly undercut it, and in doing so, and this is what I wanted to mention here, we have potential, and I can't overemphasize that word enough, potential, not confirmed divergence. And this is just something I use. You won't find it in the textbooks, but in my to me, divergence is only potential when you have prices making lower lows like you do here, and the indicators making higher lows. That's potential. It would be confirmed if and when we get a bullish crossover in the PPO. So right now you can see the PPO line is trading below the signal line. It's starting to curl up a little, but it hasn't crossed over. Now, why do I call that potential? Why don't I just call that positive divergence? Well, the indicators are still pointing lower. The trend is down. It's bearish. These indicators, they're momentum indicators. They're pointing lower, and they can continue to go lower, and they can come right on through those potential divergence lines. The RSI could fall as well. So tomorrow, I think what happens in the futures overnight tonight and into tomorrow has the potential to make or break things here, at least in the near term. If we can rally up, especially a nice gap up tomorrow, that should confirm those divergences, and that would set the stage for a decent rally, and maybe more than just a quick 1-2 day trade, maybe a week, 2 weeks, maybe more. We'll see. So it's not there yet. I have to say that's work to be done. This is where it gets tough. Now, I'll say this. With everything that's gone on recently, on the weekly and daily charts, there's a lot of technical damage that's been done. I am still, make no mistake about it, whether I position now for potential short-term bounce or not. If they stop me out, so be it. And again, that's active trading stuff. However, I still believe in the coming weeks to months, and some point in 2019, and some point really probably within the next couple months here, we're going to go lower. And so to me, it's a matter of, do we get a tradable bounce first before going lower, or do these potential bullish developments get taken out and fall apart? That would be quite bearish, and it would show me the nature of this market. Remember, a lot of technical damage done recently on the weekly and daily charts. So far, this is just nothing more than really a run-of-the-mill correction, a little on the deeper side, especially for QQQ. But if the Qs just melt down, just keep heading down tomorrow, they break, take out 178 with conviction, go lower, and then these divergences are burned through, to me that's pretty darn bearish. And at that point, I wouldn't expect any type of tradable bottom for a while. I think we're going to go lower from there. So I just wanted to kind of say that. Yes, that is the market can go up tomorrow, the market can go down thing. I hate wishy-washy analysis, but I'm leaning towards the upside resolution here because we've fallen to support. There it is on QQQ. I already showed you 178. Let me show you IWM, small caps. Small caps here, you can see it a little better on a 2-hour chart. You have the bullish divergence right here. About 148 is pretty decent support. You can see the levels there. So you have the small caps also having fallen to support. Or almost there. There could be a thrust down tomorrow. Let's say we gap down tomorrow, we could have another undercut at today's lows and turn around because IWM reversed just shy. But you know what? I could probably actually tighten that line up. Yeah, you know what? I need to tighten that line up. Come in right at that previous reaction low, right at those lows. Boom, we hit it to the penny. I didn't have my lines tight there. 148.50, that's the number. That was hit. Bullish divergence there on IWM. Shows through on the 60-minute chart. There's that on a daily chart if you put that level there as well. So we hit support on IWM, small caps. But again, it's conflicting analysis because we did have we had a divergent high, and we've had a correction. The million-dollar question, is it over or not? Like I said, I'm leaning towards what I call a tactical trade, a bounce trade here, especially if these divergences can play out tomorrow. And let me show you a few other things here. On the small caps, this is RTY, the Russell 2000 futures, and you can see same level. A lot of reactions here as I cover that level on the futures. If you're a RTY trader, 1496. That was my magic number. That was hit today, and so therefore, we could be looking at a bounce. You have this wedge type pattern here. Maybe get a thrust up, another test, but either way, that could set the stage for a decent rally if it plays out. If this support can hold, big if. And then on the NQ E-mini futures, I showed you QQQ hitting support. You can see the same. I had comparable support on NQ at 72.83-ish right there. That was last week's lows, a recent low there. We have reaction lows there. So we undercut it today. So by undercutting and then regained it, not only was it not bearish because it was regained, it was actually potentially bullish. Again, if we can get a little more upside, because what that did, it gave us a divergent low. You need prices to make an equal or lower low with the indicators making equal or higher lows to give you that positive divergence. So that's what we have there. There's still a little support below if we get a jog down overnight in the futures. But remember, we're getting pretty stretched to the downside. And then to take this video home, let me just show you really what's some other things that I'm watching here. Okay, this is Apple. Now I'm showing Apple here. This is a stripped down version, a clean chart that doesn't have my price targets, because I've shared this as a potential trading op in the video today for members. And if I didn't post a chart in the trading room or on the front page, I'll do that soon. But what I wanted to point out here, this is an Apple 60-minute chart. This is a fairly clean downtrend line. This is a bullish falling wedge pattern. That's what that is. This is your divergence line right here, positive divergence on the 60-minute charts. That's what I like to see in a downtrend when a stock is oversold, to look to position for a tradable bounce. Now, we don't have a buy signal yet. There's a difference. There's two ways that I believe to enter a long trade objectively. You either enter on a pullback to support if you expect it to bounce off that support, or you wait for a breakout above resistance. In that case, that would be this downtrend line. So there's some work to be done, but it's a fully mature bullish falling wedge pattern down to or close to support. Support's a little lower, so this all meshes. We could have a flush out move overnight in the futures, or this would take a gap down in the morning really to take Apple down below that level, and then a reversal. So I can see a little downside and allow for a little downside for some of the longs I took, including this one, and Intel. That's another one I took today. I took that one actually earlier today at the lows, because Intel had this target for many months, $43. Actually, it's been hit twice. And going back, I've shared this chart since 2018. I had when we were up here in this wedge, I had two targets right here for Intel. The 42.59-ish level, and then that 32.87. Forget about these numbers, because that was from when we were up here. So my first target was hit back in December. We had a bounce. Just like the market, we put in an even larger divergent high. So this was again my first target on the way down. It was hit today, almost to the button. Now, I still expect my second target to get hit. So that's the thing. I'm looking for the potential for a tactical trade for a longer-term strategic short on the semis and Intel, and eventually, Intel coming back down to my final swing target here, about 38.27. But if you look at the daily chart, kissed that 43, which was the top of the gap. Here's a gap back here that defines that support zone. If it happens to go down tomorrow, 41.60 would be the lower end of my buy zone, where I can continue to scale in, add to it. Much below there, things aren't good. But Intel is deeply oversold. PPOs curling up. Bullish engulfing candlestick today. That's something else you want to see, pounding right off that $43 support. So that was a very objective buy level. Whether it plays out or not, again, you have a good entry price, and if you took a fractional position or have room to add, you can continue on down here. But again, not much below that. I don't want to see it go much below that. 60-minute chart on Intel is just a nice clean bullish falling wedge pattern. There's your divergences, bullish divergence right there into the lows. Pretty impulsive move. Again, I'm not going to list targets. I've already shared that in the previous videos for members of the site. Might even add this on as an official trade if the charts confirm up tomorrow. Like I said, I can't emphasize enough, we're in a precarious position. We recovered. We had a stick save above support, but by a hair. And like I said, the gap down today, was pretty bearish, did some technical damage, and it only helps the longer term bearish case firm up. Let's not forget, I'm showing you some potential bullish developments, but the Q's closed down 1.53% today. This is prices everything. This is, so although there's a story to be told in the intraday action, at the end of the day, we closed down 1.5% after gapping below those triangles. So again, I think a lot of trap longs in there, and also some shorts that probably were denied an entry and might be looking to short a kickback rally. Final note, I talked about this earlier today. Why always talk about shorts being denied an objective entry, and what that means? Well, as I said in today's earlier video, shorts are the only guaranteed buyers in the stock market. If somebody can come on TV, CNBC, pumping his or her book, or a particular stock saying how bullish they are, or why it should go up, but guess what? They don't have to buy it. They may own it, they may not own it, they may intend to buy it, but they don't have to buy it. Something changes their mind, something better comes along, they don't buy it. You short a stock, you have to buy that stock. You have to buy to cover your position. So shorts are only guaranteed buyers, and therefore, so when you have a lot of shorts pile in, had we broken that triangle pattern, let me go back here, and let's say on SPY, because that's a beautiful little symmetrical triangle. Had we broke down below, let's say we opened today trading here and broke below, what would have happened at that point is, I would imagine, I'm generalizing here, you would have had some stops start getting hit on longs right here underneath. You would have had a lot of shorts piling in. The more we went down, shorts would have piled in, and then you'd have a pretty high short interest, which would then potentially cap any rally, because shorts, because they have to cover, they'll start buying. They buy at support if they hit their target there. But remember, we gapped down, so that probably denied a lot of wannabe shorts that were waiting to see which way this triangle broke. That denied them an exit. So like I said, where I'm going with that is, I imagine that the short interest right now isn't as high as it could have been if we had just broken down below here and walked our way down to 279 or so, 280. So let's wrap it up here. I've shared my thoughts, and like I said, I'll give you my views lately, where I'm at. I think I'm leaning towards upside tomorrow, and I'll say this: if we get it, if the futures can rally overnight and we get a pretty nice gap up tomorrow, that will help to firm up those 60-minute charts and divergences and everything that I showed you earlier. And if we don't, if it goes the other way and we gap down, well, those divergences can get burned through, and potentially bullish setups never materialized. Remember, there's a big difference between a trade setup and an actionable trade idea. And if you don't know what to do after all that, remember, here's a bigger picture. We're smack between support and resistance, and we've been chopping around lately, and that could continue for a while. I said it the other day, I didn't expect it to last very long. We broke down, but we're still within that trading range there. So and if the bullish charts play out, we're going to go up and we'll remain in the trading range. So who knows? We'll see how long that continues, but let's take it one day at a time. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.